Good to have you join us again. If you just joined us, this is Business Breakfast, iBrand Television flagship business program broadcasting to you live from our studios in Lagos, Southwest Nigeria. Now let's get talking now as we take a quick look at what's playing out in the Nigerian capital market. On Thursday, the equities market in Nigeria continued its upward trajectory, rising by 0.27% to reach a closing value of 157 billion naira. This marks its second consecutive positive close following a recent rate hike by the Central Bank of Nigeria Monetary Policy Committee, the MPC. The oil shale index and equities market capitalization increased further from preceding day's lows of 104,283.64 basis points and 58.9 trillion naira to 104,552.06 basis points and 59.12 trillion naira respectively. The market's year-to-date return increased to 39.84% ahead of the Easter holidays. However, shares of Zenith Bank, GT Coal, Access Holdings, UBA, and Fidelity Banks were actively traded by investors. Chief Research Officer Invest Data Consulting Limited, Ambrose Amodion, joins me now live as we take a quick dive at some of the activities that played out at the exchange yesterday. Ambrose, good morning. Glad to have you join me on the show today.
Thanks for having me, Blessed.
All right, before we know there is no trading activity today at the exchange. It's a public holiday today and Monday. But before we just dive through what we should be expecting in the course of the new week that will lead us to a brand new month, let's get your insights. Talk us through some of the activities that played out at the exchange this week, the fundamentals and the sentiments that actually drive up this upward trajectory that we're experiencing in the course of the market trading activities this week.
Yeah, actually, I would start by saying that it was a mixed market for the week, but for the month of March, it was a very bullish market. Reversing the previous month of February, dip that we recorded. But for me, the market saying that we are already at the peak of anything. And also, we have seen a change in the direction in terms of monetary policy. We saw almost 200 basic hike towards the rate, within the month, or within 2 months for the month of February and March. So for 400 basis points and about 200 basis points in less than 2 months. For me, it's a sign that we're seeing a change market already, and also the changing market fundamental as well of this higher yield to fixed income market. It's also playing out what on the general market and the economy. But the good thing is that yes, you can tell that the Central Bank of Nigeria is targeting to attract foreign funds at the same time checkmate what is happening in the FX market and to improve supply. So on the expense of the economy. But yes, they have their own business model they are operating for. If you look at Nigeria's situation, because they look at the move of the CBN, it's all about addressing inflation, also attracting foreign. That's why we're seeing the high rate for this 2 meetings we have seen so far in this quarter. That's also changing the market perception and also the sentiment I've said earlier. But the people that the market is so solid for the month and for the week because of what the earnings that are at the peak and also end of the quarter we will address them. We saw that after the hike on Tuesday, on Wednesday we saw also a treasury option that really went flat. This has the market also for this policy close. For Thursday, on Wednesday and Thursday, even the day of the option, it says that market is in this dimension. All eyes are seeing what are the best avenues to earn more than inflation. Because if the return you are earning in the physical market, that's what I speak now because of high interest rate. Also, if it's below inflation, you are seeing red. That's why I think both market players are trying to diversify their portfolio so that they have stock, they have physical market, so that at the end of the day, they are earning what higher than inflation. And most of them say that the percentage of earning high than inflation is what on the equity space. That's why I think we really buy interest over the last 2 days of the month. But good that the month of March closed positive, for me it's a good sign for the first quarter. We know what we should expect in the month of April.
All right, then. Thank you so much for that insight. Let's talk quickly. Let me get your thoughts on the outcome of the MPC meeting that took place this week, Monday and Tuesday, and then we saw the outcome, another interest rate hike. Ambrose, what's your reaction to this? And do you see this having any ripple effect on this stubbornly held inflation, eroding the purchasing power of the average Nigeria affecting businesses and almost crippling down the economy?
Yeah, actually, as I said earlier, that the economic managers, the central bank, one of the economic managers, and also the committee members, they know why they are like me. I remember that I said that I don't expect them to high create in this committee meeting. It's already around about almost 100 basis points the first time. And now it's not high create. Let them work to see the impact of the first response because inflation for the month of February went up. If that also we saw another hike again, we want to see if between now and April, then there's no another meeting in April. We're looking at in May. Let's between now and April, what we see. Once the March session because we was more inside if whether the hike in February have made any impact on the inflation. But one thing that we also give to this is that you can see that with the improve supply in FS and also what they also clean up the backward we have on our FS. That also have impacted on our naira appreciating, and that also have reduced the overall imported inflation. Because before now, that exchange rate has gone at 1,900, coming down to 1,280. It's also a good thing for less than 2 weeks, almost like a 35% appreciation. For me, it's a good one. But that's something that will have solved our problem. No, and I don't think that no is one problem. Once to solve a problem, to set another. And as we just mentioned, we have high create to put most of the businesses in that corner. And when there's no activities, we need to reflect on our GDP and also our what we call the real management index that we're expecting for the month of March, from now. This is just an insight into what we are doing. But for the CBN and team, we see that the economy is still very so resilient and it's still also expanding. But I'll tell you, the more inflation is going up, inflation is going on, the economy is already wanting to go to the south. And that is why we need to manage between now and the end of this fiscal year to change the dynamic of what we and go to work. And I believe start costing gradually. But let's see how it goes because I believe that further rate hikes in May will finally put Nigeria economy in a recession. Like it takes 2 quarters to go to the recession, but if the first quarter is GDP also starting up the signal we are doing at the end of this quarter.
All right, now let me get your thoughts about the latest developments coming from the Apex Bank. That is the capital base increment that the Apex Bank actually announced yesterday. So currently, as we have now, commercial banks with international authorization will have to increase their recapitalization base to the current amount it is now to 500 billion naira. And then, what is your reaction to this, and do you see this having any ripple effect on the capital market as a whole? And also, we're seeing with the way the market actually turned out, Tier 1 bank stocks actually increased by a profit of 157 billion naira. If you are to put all of this side by side, how does this recapitalization base actually boost the financial outcome of these Tier 1 banks? And then let's take a look at it holistically from the broader perspective. What ripple effect will this have on the financial sector for banks that are not able to meet up with this new minimum recapitalization base by the Apex Bank?
I would say that CBN is in tune. They understand that anywhere in the world, banking sector is the engine of any economy.
Yes.
And for them to be solid and also to meet their role, we need to capitalize. But before now, our banks are evident, strong and healthy. All we are doing is to make them bigger and stronger to move the economy to the next level. For me, it's a local development. Like I tell you that yes, it's good that the CBN has come out to clear direction. But the hearing the direction is most of the time. Now that it has become clear what is what the international class is Tier 1, Tier 2, also other banks, regional banks also should be happening. For me, it's become better. But what's again is that in all this, despite that the CBN is also trying to improve the economy, we don't suggest any of these stakeholders in the industry. One, the bank is also a stakeholder in the economy. The investor office I tell you that are also a stakeholder in the system. From what we are seeing from the approval or the signal send or kind of a clear direction that we do, that most of the banks that to exclude their work, they are taking earnings from their capital structure. But for me, anywhere in the world, even an advanced it's only that we have a capital structure that both share premium, share capital, retain earnings, and others are part of shareholders' fund. Because when a company makes profit and they retain that profit, they also value for expansion. That's why they can grow what we call shareholders' fund. But if shareholders' fund is not completed, that means most of the banks also go and struggle. When you think that banks that are not able to can be from national to regional, also the banks are able to match, also that will go to the market to raise money. It depends. But on the whole, it will help to put the economy. But also, like I said, not to change any of the stakeholders in the process. The regulators know that without the shareholders, the banks cannot go to the public to raise funds. And if those shareholders now, they are trying to subsidize them because after they have invested in a bank, the bank has generated profit and the replace of profit to expand. And just that profit retained. It's not part of capital structure. For me, it's going to send another signal towards the invested profit. I think between now and the 2 years time to sort of all this out, the CBN as a regulator, the Defense Bank, and others also look at it and give a clear direction because if the people that are invested early and also we want to go back to them to invest for you, to invest in your business, you need to also encourage them. Because if I invested in a bank like Village Bank, and I know that their share capital, their shareholder fund more than $1 trillion, now to look at the earnings, I think that their shareholder funds are around 270 billion. It has a long way to go there. Like all those ones that are below, I think it's also receiving what the banks are ready. All you are doing is just to make them stronger. For me, don't find two banks with a corner that the bank will start shaking, and that's not sending the bank signal to the corner that the banks are wound. These are the things we want to avoid. I think we have to make it clear to the public so that they will be guided. For me, it's a new for the economy, for the investors, for the bank, if everything is done well.
Before I let you go, I'd like to get your thoughts. Oscar Oyema, the outgoing Group Chief Executive Officer of the Nigerian Exchange Group, will be taking a bow. And at the pull-out ceremony organized in its favor, a lot of people have said quite a lot about his 30 years contribution to the capital market. What would you have to say concerning Oscar Oyema's leadership and his contribution to revitalizing Nigeria's capital market?
For me, what I will give to Oscar and also Nigeria is that they really brought the whole core transparent with the help of technology. That makes us more of what I'm spending on. I think that is what I can say now. But in terms of we that are close to them, we have seen a lot of looks here and there, which when shared them, you also not to correct them. So now they have become a reputed company themselves. We need to also make sure that that company that the market have for them, and not only as a regulator, also as a market player now, that also they can generate more profit for investors. It's good that before this time, and we're able to pay 25 to go. Now, finally, they are paying another 25 to go. That's all together like ₦1 for the year 2023. For me, it's a good one, and that's what we need to say bye-bye to shareholders in that company as living. It's a good one, but they need to be more committed towards the data. This is a regulation that you see that at the end of the week, you'll be taking 2 days for them to put some data that you need to analyze. But the market that is transparent, once it's closing, you should have figures around for people to play with because it's figures that come from that guide people that are playing the market. For exchange, one way or the other, you see that in week 2 days, you might not see data that are needed for after the market has closed. I think that area they need to work on it. But that's what transparent totally, I think that we should also do that people can trade from anywhere in the world. Before now, people must go to everything to trade. But with technology and also what they have done, it become more transparent and people can play it over, and that also can attract more both the youth and the old towards the market. For me, it's a good one. I will take kudos for him also wishing the best. Finally now, give us some insight into what's playing out in the fixed income market and also the commodities market. For me, for the fixed income market, I know the inflation is going to be a check to them. As far as the return is not inflation, that's why I have this the rate is for whether for TB, for bond and all. As it remains below inflation, for me, it's not the right place for those that are retail investors. For potential investors like the bank, the mutual fund, the insurance company, they can play into the government themselves. But for retail investors like you and I know that yes, if I can make more than what they are giving me and above inflation, market. All I need is to take what we call strategic position or trading towards the equity market. And that's and also for commodity market, as far we are seeing gradual, kind of application and naira coming down gradually. We put that this thing will attract towards what we improve, attract foreign investors and also improve our productivity because most of the companies, manufacturers were hit by this express problem. Now that we're seeing improvement, let it translate towards improved also activities towards the sector. That will not say yes, we are good to government for what they are doing. For until we start seeing improvement, in these sectors, other sectors about the effort that we won't say much. But for coming down from 900 to 1,900 to 1,380, for me it's a good one. We need to do more so that we see the level of our naira and let it be stable. Not that today is a result like this that we're celebrating the next 2 days is for. These somators also kind of said fear and also dampen investors' confidence. But if we are consistent and sustained, that will also improve investors' confidence.
All right. Well, if it's at that, Ambrose Omodion, Chief Research Officer, Invest Data Consulting Limited. Thank you so much for your time with me on the show this morning. We'll leave it at that. Thank you so much. All right, now, here's what's coming next on the program. We will be looking at the Nigerian insurance sector as we'll assess the growth in that sector rising to over 2 trillion naira. And also, we're going to be talking about what's playing out in the Nigerian crude oil market as prices jump more than $1 a barrel today, closing out the month higher on the prospect of OPEC Plus staying the course on production cuts amid ongoing attacks on Russia's energy infrastructure. We have more details of this and more after this timeout. Please stay with us.